My father used to tell me I was nothing more than worthless. A stupid motherfucker that would live without a purpose. Put my thoughts up on the page so I can try to prove them wrong. And every time I write a song, I reminisce about the pain that I'm repressing in my brain, so I don't have to feel alone. And I've been living with depression, so I wonder how this shit really begins. I'm comfortable with the thoughts and vision, and now it is. I've been working on this record for a minute, still I feel like nothing that I do is good enough. My insecurities are creeping in, so they will seep into the music. Ain't it funny when other people see your pain as amusing, abusing many appeal, and I'm in the way I feel to the point that my reality's the farthest thing from real. The only thing I ever needed was a little piece of love, and I couldn't find that in people, so I was seeking in drugs, and I wanted to be the greatest. Instead I'm facing the truth, but the fact of the matter is that I'm losing it. What's the use? And I know I'm sounding repetitive, like a luster for living. I pray that I've been forgiven. I say an anticipation for sinners to get this in a minute. Critical to claim to explain it, it wasn't evident. A premonition of my early death, I make it prevalent. My level and confessing that if I was down and out, I can't sell my soul to be relevant. Gallivanting around, like fuck, I'm finally free. I'm ignoring all of my problems. I said I bury them deep, but I'm actually terrified, and my paranoia was verified. Cause I just realized I don't wanna make it to 25. A suicidal psychopathic, schizophrenic kind of God is looking for your empathy, hoping that you'll remember me. The message I provided collided within the melody of metamorphosis and religion, giving debauchery, the resurrection of a savior coming out of Nazareth, where you can catch a laceration and a crucifixion. Under what condition you make the decision, moving like a sin in my position, living at the bottom, wishing I was with it, couldn't tell the difference. I'm tired of giving the false opinions. My faith in the book that was written by other people that probably wrote with agendas, so every word was intended for anyone who will follow attention. I got a testament, it's like the book of Mark, and I'm sparking a revolution. My story a revelation, amazing. I'd rather save and debated everything on my mind while I was taking a mental picture and pacing. My train of thought is evasive and fading within my memories from a deadly addiction of always staying sedated and claiming I wanna make it another more than a follower. No apologies for it. I'm forcing my fucking happiness. Don't know what I believe in. I'm seething and barely breathing. Was thinking the positivity, the possibility that I'll be saying is like a fallacy. I got a way to go and I'm showing you people gradually. I've been imagining a better life and then I contradict the consequence of feeling like a loser with no confidence. And I've been all alone. I'm trying to find the source and end the piece. I suffocate the beat until the flow is been consumed. I triangulate that motherfucker to the tone and turning out the ruin. And if I'm being honest, I think I'm losing my passion. I'm passing on opportunities, giving it to distractions. The problems that I've been having is all if it's a facade. It's quantity over quality, profit over the product and shit. If it makes a dollar, who gives a fuck if it's garbage? We'll get it radio playing and that'll make it a classic. And take a nigga with talent is about as big as a grain. It's hard to put him on the pedestal. He'll eventually catapult the perpetual force of the action was so distracting. They forgot that motherfucker was never decent and rapping. The ribbon is in the past and there ain't nobody original, but niggas stealing styles and never giving their credit. Accepting that shit's pathetic, a hypothetical ponderance. I put it on the paper for people. I'm being honest with abolishing a novice. A murdering is accomplice, a complicated affair with a notorious hindrance. These habitual liars supplying a lot of ignorance. It's all about an image, so everyone's irresponsible. And if you got a positive message, then it's impossible to overcome the current plight. A rap combating obstacles are logical to think that the future is looking brighter. When money comes into play, then the vision will get distorted. Cause you was forcing the feeling by acting out of your character. You lost your sense of pride and societal that embarrass your bad at making it now. While you coming up from the rubble, refuse to be interrupted. No need for an introduction. My shit is really disgusting. It's different and impeccable, intelligent and highly respectable. You're susceptible to this lyrical giant, a tyrant acting defiant. I'd rather do this alone. So motherfucking alliance aligning with preservation. The practice my dedication by defecating the delicate, relegated with delegates to giving rigor more than supported within the deficit. Celebrated the reverence, televising my decadence from years of destitution. The resolutions are relevant. It's got it to the point where I can see that nothing's really all. It's leaving me appalled and I'm embarrassed. I will get involved. A mental regression, for I have yet to evolve. Gotta find a spot to put my aggression before I'm gone. But the pain that I feel has lasted so long. So by the end of this song, I pray I find my desire. Cause I'm refusing to fake and I'd rather phone to retire. So my generation remedial. I really can't believe this shit is happening any lie. I'm surrounded by fucking geniuses and you gotta be kidding. The only thing I was meant to be the dopest motherfucker that people will probably never see. And if I never make it, then I'm fulfilling the prophecy. Everything that I write has been centered around my honesty.
Good afternoon. What's going on? I put the title today. Obviously, I'm running out of titles. There's nothing going on right now. Why, oh, why? Because it's like I come back to streaming and I want to be here. And that's when price action decides I am actually going to go sideways. Completely. All right, let me switch over here. Do I open up the window? Yeah, I think I open up the window. That way I don't feel like a hermit. What's going on, guys? Good afternoon, good morning, good nights, wherever you guys are at. I appreciate you showing up. Crypto Andrew, let's go 3 days in a row. So what's up, man? You know, just trying to prep myself to be back more often. Because as the market shifts into the bull market, obviously I can take a little bit more time off of working. So, Twixie, hey, what's up? Nothing much, man. Just got home. Hopped on here to say hello to my friends here. Just got back in the gym. Wicked and stoked to see Kite live stream starting. I appreciate that. I don't think I'm really, gym material. I'm not that hype, but I appreciate it. Good morning, Kite. Good afternoon to you. Schoolboy, what's up, Kite? Nothing much, man. Nothing much. It was an all right day today. I feel like, you know, when it gets towards the end of the month, there's just too many people out there. It was really good in the morning. Like, I made tons of money this morning, but then once, I would say like 11:30, 12 o'clock hit, it slowed down extremely because everybody's off work today. So, I mean, they got bills due, so they go out and work. Can't blame them. Can't blame them at all. It's not my problem. Absolutely no movement in price at all. That's what I was just saying. No movement in price at all. Obviously, it's even worse because, you know, every time I look at the BTC chart on the CME, because obviously the CME is closed until tomorrow, it's literally the same exact price as we left off. Obviously, if we go to different exchange here, you know, we're getting a little bit of price movement, but it's legitimately just sideways. But hey, if you're in the bullish camp, this, you know, I'm not saying it's totally bullish, but, you know, the longer that we stay above the high here, more chance that this will actually continue rather than confirming back down to the downside. Since nothing major is happening, I'm going to stick to the CME just because that's where all my stuff is at. It's just easier for me. And of course, take off all the technical analysis because I'm sure I'm going to have to explain it to someone, which I love doing that, by the way. Like, you know, if it wasn't for people asking me questions, the streams would be totally boring. So the more tangents I get sent off on, you know, the better. Prithvish said, hello, my girlfriend. Thank you, I guess. Welcome for the third day, because the girls which I date will never show after the third day. Yikes. I'm sorry, man. So I'm fed up with this dating culture now. All girls need is money. I mean, that's everybody, you know? It's just as men, we don't have that luxury. You know, when men go out to date, we don't date looking for someone with money. At least, I would say like 99% of us. You know, obviously we would like to find someone that's financially stable, that's not drowning in debt, but we're not looking for them to add a surplus to our life. We just want to be able to make sure that, you know, we don't have to dump a ton towards them. But everybody's looking for money right now. That's just how it be. That's just how it be. Until people tighten up, that's how it's going to continue to be. But, you know, I don't think it's everybody. I don't think 100% of girls are that way. Date plants, get a greenhouse. That's definitely advice. I don't know if that's the way to go, but that's advice. There's sideways and then there's this shit. Yeah, I mean, it's definitely not exciting. It's not exciting at all, but it's there. And like we said before we hopped off the live stream yesterday, I did end up entering short on Ethereum. And, you know, if I am going to take profits on it, it's probably going to be somewhere between 2,500 to 2,323. You know, this isn't something that I looked at before, so I can't really take credit. I was just on crypto YouTube today, kind of trying to get a sense of what everybody's feeling, you know, what the sentiment is, if people are super bullish coming out of this. And, you know, I stopped by Crypto Lark, one of the OGs, and, you know, very simply, you know, he pointed out the fact, we've always explained the analogy of, like, you know, the Bitcoin halving as a boulder, and then the pool keeps getting larger and larger, so therefore it has less of an impact. But he just kind of showed off, you know, how long did it take the market to start actually going to the upside from the halving, and that it's getting longer and longer, because obviously it takes longer for that scarcity effect to have any effect at all, because we're at 97% mined. But in the beginning, you know, it would only take about a month. Over the past 2 bull markets, it's typically taken about 5 months. So we have not reached that 5 months yet. We still actually have quite a bit of time, but beyond that, I don't think it's exactly going to be 5 months. I think it actually might be a little bit longer, so maybe 6 or 7 months. So I'm not changing any of my ideologies here. All right. At the moment on Bitcoin, we are above the A, which is extremely bullish, and we had a bounce of support off of previous resistance, which is also extremely bullish. All right. But considering the fact that it's going to be probably, you know, a little bit longer than we might like before we actually start screaming in an uptrend, there is, you know, plenty of time for stuff to form, where I might even start saying, hey, if this and this happens, there's a probability of, you know, a retest of 38,500. Now, like I said before, you know, just considering all the factors, I don't necessarily think 38,500 would get hit, but we would break into that range, whether it's slightly or, you know, halfway through, you know, just to kind of show you what I'm saying here. So besides the all-time high, all right, which is roughly like right here, all right, our only other support and resistance regions on a macro scale, because, you know, everybody thinks that the 5-minute time frame is going to save their life. No, it's these time frames save your life. All right. We only have 3 major, well, technically at this point in time, you know, as these supports are built here and here, all right, these are now significant levels. All right. But for all it's worth, oh, I didn't mean to do that. Why did it go all the way over there? For all it's worth, the only levels that really matter are these 3, and then obviously based on the structure, this level here. So if we do happen to form a structure significant enough, all right, now it would have to be, I don't think it would happen off of this. I could be wrong, because, you know, this is a decent sized ABC. It's very clear and I don't know where that came from. It's very clear and distinct, and it's of equitable size to something like this. The only difference is that this was an ABC at the top of a resistance. So therefore, we have plenty of freeway to come all the way back down, even if the ABC itself wasn't necessarily like a super large structure. All right, because we're just working within the range, and we're at the top of the range, and we're bearish, so therefore expect the bottom of the range. In order for me to even kind of begin to think, obviously, if this ends up working itself out and we just go voop, so be it. But in order for like my opinion of bullishness to disappear, because I know this is crazy hard to believe right now, at the current moment I am bullish, all right, but if that opinion was to change, it would change based off of this pattern becoming a 3-part structure. If that happens, that is a large enough ABC for me to say, all right, if that confirms to the downside, that has enough priority for us to say that it could actually break a macro support. And that would look something like this: an A to a B to a C. All right. If we get that size structure and it ends up confirming to the downside, and it happens relatively quickly over the course of the next couple of weeks, maybe a month, we still have plenty of time before statistically the scarcity effect from the halvening kicks us into overdrive, and who cares about resistances? We blow past those. All right. If that happens, then I definitely could see something like that. All right. Then this would actually look probably even a little bit better in terms of an ABC structure, because at the moment with this you know, triple dip buffalo chip, it's we can see what we need to see, and we have the levels in which we need to be bullish. But if this were to turn into a long string and then we have a nice ABC B wave and then probably like a fast C before things kick off, to me that actually looks a little bit better in terms of structure. Just me personally, because we don't have any you know, I mean, you could say that one there, but it's not significant. It's not juicy. There's no ABC transition to show me, because traditionally within an ABC you're going to see an A to a B to a C, but we don't see that here quite yet. So this is definitely something I'll be watching out for in the future if we end up putting on that downside price action. But if this were to happen, I you know, 44,000 I think could be a probability. Like I said, technically the range would be then 49,400 to 38,520. So pretty much anything within that ballpark would be within bounds. But personally, I probably would only see us getting about halfway. You know, maybe not even that. Maybe, you know, just a little bit lower here would be fine by me. And, you know, and likely. Like I said, I'm not, you know, people, when I talk about downside, it's as if like I'm saying that we're never going into a bull market, Bitcoin's done, sell all your Bitcoin. No, like what is that? Why do people feel that way? It boggles my mind. Hey Kite, are we able to buy lifetime membership on Patreon Discord? Yeah, I mean it's still on there. Probably once we significantly move past the all-time high, I'm gonna take away that option, but it's there, and it's half price than what it usually is. So if that's something that you're willing to do, I would highly appreciate it. And I mean, you know, since there's probably only like 2 months left, if you do end up buying the lifetime Discord membership, you know, let me know, and we can schedule like a one-on-one session as well with it. You know, just to make sure you kind of know what's going on, and I can help smooth out any rough edges. You know, if there's any questions you want asked. Are you doing meditation? At nighttime, yeah. But it's not like something I do during the day. It's usually when I'm going to bed. I'll have like a little meditation technique. I'll either do breathing exercises or I'll do counting exercises. We might have to revive Beyond the Wicks at this rate. Definitely during the bull market, we'll have some co-streams on Beyond the Wicks for sure. Tron got rugged. Okay, this must not be the right chart. They got rugged? Are we looking at the same charts? I mean, this is the opposite of a rug, right? When I was transitioning to this chart, I was expecting, you know, a big candle to the downside. That's not rugged. What are you talking about? Am I looking at the same coin that you're talking about? What's going on? We in the Twilight Zone? Or are you talking about ton? Rodrigo. Because you type Tron. Now, you know, since we're on the Tron chart here, obviously we can do a little bit of macro on it. A to a B to a C. Previous macro resistance was here. And obviously the new one is here. So, I mean, we definitely, like, if things do dip back down to the downside on Bitcoin, Tron definitely, with no support that was built during this uptrend, could definitely return back down to the bottom of this range for sure. You know, on the smaller time frames, we do have an ABC top here, you know, just because of how skinny these trends are, A to a B to a C. So, I mean, there is a position to be had there. How many percentage points back down is that? 22%? Is that confirmed? Alright, frick it, dude. I'm a degenerate again. We're back. We're back. Alright. Small risk trade because it's there and there's so much opportunity within this range. Alright. I'm going to take the trade. I'm just going to take it. This is the $100 account that I'm working on. Currently on the actual exchange itself, I think there's only like $50 worth of margin, but that's because I took profit on the long trade from here. We were up like $50. So I took profit on that. So can we trade Tron? No. No way. TRX? Okay, there we go. So right now on this small portfolio, I'm using about 5% risk. I'm using more on the bigger caps. But I'll throw in a little bit of something. Put this to isolated. And 25x. Lost value. And then $10. And we're going to be using about a 2% stop loss. There we go. So 5% risk. Now this is a super thin ABC, so for it to come all the way back down just purely off that ABC, not necessarily a likelihood. It's actually not. But just because we're towards the top of the range and this is kind of out of place, and Bitcoin and Ethereum are in short positions, this altcoin definitely could have a more severe reaction, even though the ABC itself is thin. See what you did to me? You made me go look at Tron for 2 seconds. And you got me to spend money. Who are you? And what black magic did you just do to me? Alright, where's my chat? There we go. I know you don't follow the news, but have you seen the ton dump? Yeah, people brought it up yesterday on yesterday's live stream, and I looked at a single tweet and had to make a deduction on what is happening, based on. So I know it's the owner of Telegram's cryptocurrency. He has been arrested, and what would be really, really funny? It'd be super hilarious. So before he got arrested, we were in an ABC short position. Well, I wasn't, but the market was, from an ABC perspective. And from a macro position, we haven't yet put in an ABC telling us to go long. So obviously we had an A to a B, and we could assume the market wanted to make a C the entire time. What if, him getting arrested ends up being the result that causes the C, and then, he gets, let go, and then it just goes whoop, and we had the ABC. That'd be pretty funny, right? That'd be pretty amazing. How's KDA doing? It's down in the dumps right now. But that's the thing. It's an altcoin, and Bitcoin was bearish, so obviously it's going to have a little bit of an overreaction. But we had an ABC top calling the downside. Really wouldn't have believed that we would be back at the actual low. But I mean, that was a significant ABC top there. So I mean, that's kind of on me. But at the same time, targeting local low here, and here was kind of my ideal setup. But we did end up putting in, obviously, the super macro ABC, and we are back above that. We ended up putting in a medium time frame ABC, and we're back above that at about 40 cents. And we're kind of just chugging along to the upside here. So, I mean, Bitcoin, if it dumps again, obviously that could change things. But I explained on last live stream, I don't have a timestamp for it. If you're curious on why KDA, why is that important to me? It's not important to me from a dogmatic perspective. I really don't care about their team. Obviously I looked into them just to make sure everything's legit, but I'm not sitting here saying that KDA is the future and, it's the next Bitcoin, all that kind of stuff. It simply comes down to simple math based off of what is the average altcoin market cap during a bull run versus the circulating supply, and what is the opportunistic price point that we're at now, and does it make sense for me to throw a small portion of my portfolio at it? And that's strictly it. It simply comes down to, it all kind of works out on paper. So small risk, large reward. That's what being a trader is. If you start approaching things from an emotional level because you just kind of like being that person, well, you're not a trader. You're just kind of a idiot. So there you go. That's my touch on that. Hey Kite, do you take shrooms now? Are you still single like me? Yes, I'm still single. I haven't done shrooms in probably a year or two, and it's been quite a while since I've had lysergic acid diethylmide. But hopefully someday in the future, either hopefully another analog comes out that's safe and legal for a short period of time, and I can get my hands on some, or maybe we make some amazing strides in the mental health department, and there's professional retreats or something that you can go to that are supervised. I feel like that'd be pretty cool. That would be something I would like to take part in. That's kind of what I want to do in the future as well. Obviously, I don't think lysergic acid diethylamide, I like saying the full name because it sounds scarier, will probably ever be legalized, even though technically it's the same exact thing. I think what it comes down to is it's so easily weaponized. When you have something that powerful where a single drop of it, if you can see the drop of it, it's too much. You know, you could just go spike someone's coffee or something with that, and they just can't, they don't know. You know, with shrooms, I feel like that has an easier time getting legalized, because obviously it's much harder to prevent it. You know, you can go down to your local park, you know, as long as it's got nice mulch, and you can find the exact mushroom, completely safe, consume it after drying it, and boom, your local department of Parks and Recreation is now supplying you with drugs. You know, and as well as that, like, you can't like secretly dose someone with a large dose of mushrooms. You know, like, I mean, I guess you could grind it up and put it into a tea, but who's going to accept tea, you know, from some random stranger? Because when it comes down to like the safety of them, they're equally the same. There's always those people that kind of like stand on the pedestal of like, you know, I don't do acid, I do shrooms, because shrooms are natural. They come from the earth, just like me. So that's why I consume them. Well, I'm sorry to break this to you as well, but acid is the same exact thing. All right. Now, there's a couple extra steps, but it's not like you're mixing in chemicals and BPAs in order to get the product. All you're doing is taking a fungus, just like shrooms, that grows on wheat, and you are synthesizing it down to a liquid so that's easier to consume. It's the same thing. They have very minorly different effects on how they make you feel, but it's the same thing. You know, so I don't really do the whole high road, I'm a naturalist type thing. Let's see. Let me go look at TRX again just for 1 second, just so I can have a clear idea. So, from a macro perspective, we have local low, local high, local low, local low, local low, and local low. So obviously, Tron could still continue to run to 18 cents. It has that freedom, you know. That's why I'm using slightly smaller risk than the other trades on my account. But, you know, back down to kind of this midpoint here, the last previous high. So anywhere kind of between 14 cents and 13 cents would be my target for the short. That's what I would probably be holding it towards. So, I mean, that's, you know, between those 2 points, that's 18%. So if we're looking at 13.6, so 0.136. Well, that's not too bad. It's 43 bucks on a $100 account. Not too shabby at all. Degen time, let's go. we're back, metaphor. We're back. We're back to degening on stupid ABCs. I probably shouldn't be doing that this early in the portfolio, especially with 5% risk, but I'm already up a lot on the 2 other ones. Like those, that's already hedged, so no matter which way that goes, I'm winning that one. And I already took profit on the long trade. And partly the reason why I am going to attempt to see how that works out for me during the bull run. Obviously, during the bull run, you're going to have a lot more breakout trades, so you can't really rely on significant retests to the downside once we actually really start proceeding to the upside. Is Tom Hugard. So Tom Hugard, you know, he talks about a good trader rather than taking profit would actually add to his positions. So obviously I don't really feel like just kind of adding overall, but a secondary option for me would be reopen the position when it makes sense. You know, as long as we're above the A, having that long open technically is still within bounds, because if we're not below the A, then we're not shorting. And if we're above the A, assuming price will still continue. All right. So I'm basically adding to the position in that way while still taking profits. Because once I take that profit, my margin will increase because my account size increases. All right. And I am basically putting myself in a position where I can get stopped out again sooner. But in turn, I'm still in the long position itself. Did that make sense? Hopefully. Which one? The best loser wins? Can you leave some pills or shrooms after the stream in the third block? Leave your money in the mailbox. Circle back around and you'll find your dose. And James, I didn't mean to ignore you yesterday. You know, just there was so many messages and stuff that, you know, sometimes I get lost, and when I go on a tangent, you know, your message will get lost at the top. If I remember correctly, James, yesterday, did you ask me to explain like Kelly Criterion again or something like that? I don't know if you did it. I don't know if it was you or somebody else. I thought it was you. Because I saw the message and I got distracted, but then when I was in the car today, you know, for some reason my brain was like, you didn't answer that guy. So let me know. You said I just went full Kelly 125x short on Tron. I'm so sorry. You know, that you got into that situation. Hopefully it works out for us, you know? That'd be cool. What's the best way to use L-Bank in the US? Do you need a VPN? L-Bank is essentially what Bybit was back when we kind of got into crypto. Technically, like when you log in, you need a VPN, but like right now I'm using L-Bank and I don't have my VPN on and I'm still logged in, you know? So, L-Bank, you know, they might log you out every so often, but then you just need to re-enable your VPN and log back in. And, you know, they're not going to send you a message saying like, we've detected that you're, you know, a US citizen. Be prepared to die. We're taking all your crypto. They're not going to do that. I'm in a long in BTC in 1 minute with risk management. I like how you added the risk management part just so I wouldn't scream at you. Which, I mean, like I just said, technically at this point in time, you know, we are a little bit far away from what would be considered a long entry if we're approaching this with kind of like my new strategy, but we're still above the A. So, I mean, entering long, as long as you have a stop loss underneath you and all that kind of stuff, I guess, all right, man, you know, make sure you're doing good, but it's not like a stupid decision. You know, if we were like sitting right here at like 62,725 or something like that, and you were like, I just entered long off the 1 minute, I would probably be screaming at you, to be frank. But all things considering, it's not like a terrible decision. John reminds me of when you were trading sushi and other alts. Yeah. Good times. There's a couple good trades that we made off of sushi, but towards the end, like once liquidity started drying out from the market, you know, it just started having a lot of those situations where it's like, is this even worth my time? You know, I can go play something else that's actually working out. So. reckon we will get out of this sideways choppy motion anytime soon. Probably tomorrow. You know, the CME's open back up and liquidity is probably going to come back to Bitcoin. So we should have some sort of decision tomorrow. And it's probably going to be a positive one. You know, considering the fact that we closed on Friday above the last high, and unless anything happens within the next 8 hours, well, actually closer to like 12 hours, 16, yeah, like 16. Unless anything happens in the next 16 hours, that puts us back below that low. When the CME opens, I do believe that they're going to take that as a bullish signal, and they'll probably push higher. Bank, decent fees for limit orders? I can't really tell you. Let me go take a look at the website real quick and see if they have it listed up front here. Let me see if they have like a help section. I mean, usually limit fees are no biggie. Where can I find out what the limit fees are? I'm trying to look for like an FAQ. Okay, fee rate. There we go. The spot trading fee is 0.1 to 0.2% for makers, and is 0.1 to 0.2% for takers. The futures trading fee is 0.02% for makers, so limit trades, and it's 0.06% for takers, market trades. So yeah, I mean, that's pretty decent. I am obviously of the taker portion of this. To like, you know, maybe in the future, like when I'm working with a lot more money, you know, I might attempt to kind of transition to a play style that, you know, will tweak my current play style into a limit trade style, because obviously that's going to save me a lot more money. But right now it's so insignificant that being a taker, at least the way that I play, there's just so much more peace of mind. It's just so much easier. So it's a cost I'm willing to pay. You know, the R&Rs that ABCs see are so significant that it's not an issue to me. And I gotta keep an eye on the time. We're about 44 minutes right now. I really don't want to go any more than an hour and a half. I feel like if I keep doing these 2-hour streams every single day, I'm going to run out of juice. And I already got home a little bit late today, so I still want to have time to kind of chill out. I got into a long at 58,200, then added at 60. So my average is now 59.2. Let me see that. 59.2. So the original one was 58.2. All right. Okay, I see what you did. All right, cool. That works. Oh, let me make sure that it's popped out here. There we go. All right, so let me attempt to see what you did based off of the price points that you gave. So we had A to a B to a C. For anybody that doesn't know already, you know, I'm sure many of you guys have been using TradingView for years. If you hold control while you're trying to put in your ABCs, it will snap it to the highest or lowest point of the candle. You know, just throwing out a little tip there if anybody hasn't figured that out. So 58.2, I'm assuming that you entered, you know, as soon as we got above this ABC structure here. You know, maybe it was, you know, a little bit different on the exchange that you're playing on. So you got a little bit different of an entry than the CME here. So you entered there, and then you added to your trade at 60,000. So you added way before we broke the A of the larger structure here. You said you added at 60. I'm curious on why. You know, did you just have a gut feeling, or, you know, I'm not shaming you for doing it. You know, obviously it worked out, but I just want to kind of know what was the reason. Was it intuition? Because the main thing that I don't want the answer to be, I'm fine with anything else. You know, you're like, you know, we're holding above the A from the previous structure. So, you know, price actions holding support, whatever. I'm fine with those answers. The only answer I would be upset with is if you like honestly told me like, I just want to make more money. You know, I punched in 70K as my take profit, and I was unhappy with the number that I saw. So I added more margin to the trade. So that way, if we get to 70K, I make more money. Because that's greed. You know, greed without a plan equals trash. But, you know, I'm not putting words in your mouth. I'm just saying that's the only thing that I would be afraid that was the answer. Look at Polkadot's chart if you want to laugh. Is Polkadot dot? Yeah, it is. Okay. Oh wow. I mean, what is there to laugh about? You know, obviously on like a macro time frame here, it's down in the dumps, but I mean, it looks very similar to KDA. It had a very nice ABC top here, which had confluence off of this last macro local high. You know, we tried to break past it, but obviously couldn't. We came back below it, and you can see on the smaller time frames, we had a little retest, rejection, fell back down to the local low from the previous ABC structure, kind of held support around that region for a little bit. And now we are, you know, kind of just chillaxing. Obviously, this is the macro local low here. You really don't want it to go below that. And a versus trend, I mean, this is the only thing I can see. It's not fun. Like, that's not an ABC that I would be confident taking a trade off of. You know, maybe if we got back above $5.70 and then, you know, we had, you know, a retest like that, you know, that would be something I would like to enter off of if I was trading Polkadot. But I probably wouldn't be entering off of that A. But in terms of like medium time frame, you know, it's pretty cut and dry ABC top right here. Like much like other coins, I don't think this is the ABC that's going to push it past its all-time low, but you know, hopefully this builds into an A to a B to a C, and then from there you can have your A to a B to a C to hopefully continue to push higher. Yeah, I opened up at 58.2 after the last drop to 57.5, then added on that wick down to 59.6 as I saw bullish confirmation. If you got a strategy and you're sticking to it, you know, adding to the trade isn't going to hurt you. The episode you linked from Caleb Hammer's show was so good. I'm addicted to the show now. Is there another episode you recommend? Oh man. Oh man. I'm so glad you liked it. I've been watching him since he was like very small, only like 30K subscribers. And he's blown up, and rightfully so. Like, he's got a fun, you know, obviously sometimes he can be a little bit of a dick, but it's all from love. You know, he legitimately wants these people to have a better life. So when he sees them doing stupid things, he is rightfully annoyed. So if you go to Caleb Hammer's channel, I would recommend watching this episode here. 41-year-old refuses to get a job and grow up. Watch that episode in full, all right? And then go watch He's Back, where he returns to the show. And that episode, that's an episode. That one, it had a very good ending. It had a very wholesome ending, but it had such a rough start. It's ridiculous. You know, that guy is unhinged. But yeah, I love watching that when I'm in the car. It's so much fun. But yeah, if you just go to his channel and sort by popular, you know, those episodes are popular for a reason. They're the good ones. All based on the last larger ABC from the drop to 53K, then the pump to 70K. All right. I got you, AZ. I got you. I think I remember watching your lives a few years back. I remember when your main strategies revolved around S&D. S&D. I don't quite know what that is an acronym for. And Elliott waves. Has there been any major changes in the way that you carry things out? Yes and no. So if you were watching me when I was heavily involved with Elliott wave, then what I'm doing now shouldn't be that much of a drastic change. So, you know, just to kind of start off, you know, why did I go away from Elliott wave? I never fully left Elliott wave, and I'm still technically doing it. But I'm doing it from a more relaxed mindset, which in turn, I make more profit. And the profit obviously comes from the trading strategy itself, but more importantly, like the positioning, like my margin, my leverage, my stop loss, my risk tolerance overall, combined with the new methodology. So Elliott wave is fantastic, but one of the major issues that I was personally feeling and that I personally saw from the Elliott wave community is kind of an arrogance. Because Elliott wave is so powerful, they pretend like they can be Nostradamus and predict exactly where price is going to top and bottom out. And because of that, it prevents them from making good decisions. So like, let's say you're in a short position and you got a really good entry, and now price actions is moving down. Your 1.618 target could be $5, and we're at $3. Now, $3 might be showing signs of reversal to the upside on a macro scale. But because of Elliott wave and your trust within it, you're still targeting $5. And you don't want to, you know, take profit even though the market is showing you signs of reversal. And because of that, the trade slides back on you and you end up doing stupid things, especially when you extrapolate that down to a much smaller time frame where things move quicker and the leverage tends to be more violent and works against you. So what ends up happening is sometimes, you know, set your stop loss, you add to a losing trade to cover your losses and hopefully regain them, your revenge trade. And once again, it all comes back to that feeling of, I know what the market's going to do. So therefore, you overestimate, over risk, and you don't get out of positions when the time makes sense. So I took that and I kind of started slowly stripping away the stuff that I felt like Elliott Wave hindered people with. And that was mostly trying to predict every single top and every single bottom. And Elliott Wave traditionally works in a 1, 2, 3, 4, 5 to an ABC correction. But what I found is really you only have to pay attention to the ABCs. And if an ABC isn't of a significant size, then most likely it's going to be a, you know, let's say we're in an uptrend and we have an ABC, you know, like this. All right. This isn't necessarily a significant ABC in my eyes, especially if there's no building structure into this. So if it's a straight shot up and, you know, kind of a fast move down and a straight shot up, that to me doesn't hold any real significance. Like if we go look at BTC real quick. All right. You can see that this ABC here, we had an, you know, an uptrend, downtrend, ABC, uptrend, downtrend. We didn't end up putting an ABC on that one, but that's okay. You can see there's multi levels to this. Whereas if it's just a straight shot up, straight shot down, straight shot up, I'm not going to hold any real significance to that. So even though I'm not really trying to capitalize on a 1, 2, 3, 4, 5 pattern, I'm more looking for just the ABC tops. And, you know, just in this range, for example, it's more about kind of combining waves together and looking at the larger pattern involved. So we have A, B, C. That's an ABC top. There's a short position. All right, right here we have an A, B, C. That's a long position. Right here we have an A, B, and a C. Short position. And then obviously as the structures start to build on top of each other, we start even combining those structures. So we have an A, a B, and a C. And that becomes our largest ABC structure that we currently have. Obviously, I'm moving sequential to time, so obviously we have put in a more significant one. But we did put a ABC within the C wave here, but the entry for that was a little bit higher, so I would have felt more secure taking it off of this one. You can see this one, there was a lot of sideways price action along that line, so that would have been rough. Obviously, the lower the entry that you can get for a long, the better. But you would have had a long entry here, a short entry here, long entry here, short entry here. You would have had a long entry here, and A, B, C, short entry here, and then obviously another long entry here. And then at this current moment in time, we do have the setup for a short, but because we are not currently underneath of the wrong thing. All right, this is our current pattern that we're trading off of. All right, because we are not currently underneath the A, you shouldn't technically have an open short trade on Bitcoin unless you already have opened one based on the short-term price action that happened when we were covering that line, and you have a larger stop loss and you just haven't been stopped out yet. But other than that, you should not be in a Bitcoin short because we haven't confirmed to the downside. But just in this sideways range, all right, we have had so many opportunities. Now, you would be playing on multiple accounts, and this is what I was saying before. Elliott Wave, I would have like a single account, and because I felt so confident on where price action was going to go, I would, take profit at every single top and every single bottom, based off of Fibonacci's and everything like that. That I ended up squandering what could have been crazy trades. So The ABC method, if you're just doing the main method, you're mostly hedge trading against yourself after you find yourself in a good position to maintain the profits that you've made, but you're looking for it to stretch. So a really clear example of this would be, let's say we have an A to a B to a C. All right, now the way the ABC method works is once you have a downtrend, uptrend, downtrend for a long position, and then vice versa for a short position. All right, when price action gets back above the A or back below if you're in a short, that's when you enter your long position. So it would look something like this. You would enter as soon as we get above it. And I mostly do, you can do it on limit because a lot of the times we will have a slight retest like this before continuation. You can do limit, but I just prefer not to. I don't like to mess around with that. And if I ever miss an entry because of it, I would be pissed. All right. So just kind of the way I feel, the way I trade. Holy smokes. What did I just do? I did not even know that was a thing on Windows 11. If you hold the Windows key and you press plus, I didn't even know you could do that. That just scared the crap out of me. All right. I'm sure that's been there for forever. I'm stupid. So Elliott Wave, if I had a structure that looked like this on Elliott Wave, I would be taking the 0.618, you know, because of the way that I draw it. I know I'm different. I'm quirky. All right. A regular Elliott Wave trader, their 0.618 would be my 0.382. All right. So traditionally you would target 100,065 on this trade, which with this trade setup, that's a good risk reward ratio. But a lot of the times it was only allowing for 6s and 7s and 8s. Because of the nature of Bitcoin and the fact that I'm just a high stakes trader, I like to use small stop losses. I'm willing to get stopped out faster than a lot of people. Most people don't even put stop losses at all. So that's where I'm different. All right. So I use very small stop losses. And because of that, I tend to get stopped out more. Now, if the trade starts working for me, that's where things go right. So, you know, for example, if I use like a 0.5% stop loss, and because that is a pretty small stop loss, I get stopped out 6 times. Now, if I'm using 0.5% risk on a real portfolio, I'm talking big money. All right. Getting stopped out 6 times doesn't really hurt my overall. If I'm using 10% of my portfolio per trade and I get stopped out 6 times, you can see how that's a huge problem. All right. Big difference between those two accounts. If I took profit at the 0.382 after getting stopped out 6 times, I wouldn't be upset. But, you know, for example, if this was a smaller setup and I could only realistically target the 0.382 and only walk away with a 10, that's not really worth it in my opinion. So the ABC method, it's not so much about the price structure. Obviously, that's where it gets its name. It's more about your willingness to let price action do what it needs to do to maximize profit. All right. Now, you're never going to be getting the exact top. There's occasions where we get pretty damn close, if not on the money. But for all intents and purposes, you are going to kind of be getting the 80% of it. But what I'm trying to say here is this traditional approach of having a set in stone take profit target, although kind of gives you some sense of security that, okay, we just need to go back up to there and I can take profit and it's a really good risk to reward ratio. I'm fine with that. I understand where you're coming from with that, but that's not how a person is actually going to become a trader of any size that is significant. You know, if you listen to Trader Tom, he talks about this all the time. And this is something that I've learned for myself. And this is why I've transitioned to be this way. So I know I'm taking a long time to explain this, but I just want to make sure it's thorough. If you have an ABC setup like this, all right, instead of targeting the 0.382, forget about it. I don't use Fibonacci's at all anymore, besides kind of like memeing around. You know, I threw a Fibonacci on this macro structure to call 176,000 as the next market top, but that's just me being playful. I really don't use Fibonacci's anymore at all. Just like how I don't watch the news to impact my decisions at all. Because to me, trying to pretend like these things are going to make you money is stupid. They're preventing you from making substantially more. So in this scenario, one trader takes their profit at 100,685. Now, if you're doing the ABC method the way that I do it, and of course, another sidetrack, I don't believe that this is wrong. I don't believe it's wrong to do this, but this isn't the main profit maker. All right, this is not the main profit maker, and hopefully your B wave, all right, coincides with the 0.618. All right, if your B wave is before the 0.618, then more than likely you're going to be taking profit at the B wave or right before it. All right, so like I said, I mean, this could be even worse. It could be a 12. And like I said, if you get stopped out 5-6 times, you don't want that to be the goal. All right. Now, the way that I do it is I let price action do whatever it wants. If I get stopped out, the risk should be so minimal that it should not hurt me. So therefore, I should let the trade run until it can't anymore. That's the goal. Tom Hugard, simple saying, he buys high and he buys even higher. He sells short and he sells short even lower. And that's essentially this whole methodology, is we're working with price action to maximize profit with whatever price action gives us. And that's it. So the way that I go about it is I have my first entry. And then from there, price action, if things work out correctly, should have a positive reaction. Now, let's say price action goes significantly past the 0.618. All right. I'm not taking profit. I'll tell you when I'm taking profit. Okay, so I drew the retracement here to emphasize a point that you're not always going to get an ABC, right? If the market's bullish enough and people just are ready for it to move, then it's going to move. And sometimes, we just don't need the market structure to have a reason. All right. ABCs are something that shows up commonly, but they aren't like the end all be all. Having an ABC top doesn't necessarily mean that you're all-time bearish. All right. It's more of a small inkling that the psychology of the market is leaning one way. And that's all we need to be a successful trader, is a small hint that the market is wanting to do something. And then with good risk management and proper psychology, the rest is history. So we take our initial entry based off of the first ABC long at the bottom here. All right, the first trader, they take their profit here, all the way at the bottom of this trend. Now, past that point, they might be feeling a little bit of FOMO. So, you know, they try to, you know, enter long, you know, here because they think the trend is going to keep zipping on up to the upside. And then they end up getting stopped out on this B wave and then maybe even this retracement. And there's no long within this retracement to get a clear entry. So as if they're sticking to their rule base, then technically they shouldn't have an entry all the way all the way up this uptrend, besides this one here. Now, based off of my new kind of methodology, something I'm testing, it's not set in stone. I still need to see if it's profitable and worthwhile. But, you know, once you take profit on that trade, you know, you can kind of take the breakout trade on the next. But the first trader takes their profit there. That's a 20 R&R if they're using a 0.5% risk, 0.57%, which, all things considering, a 20 R&R is pretty fantastic. Now, if you're getting stopped out 10 times because of a smaller stop loss, and it's all luck, really. You know, obviously, I don't ever want to get stopped out, and there's times where I don't. There's times, you know, I would say on average, probably getting stopped out 2 to 3 times is probably my average. But I've had altcoins that absolutely would not quit, where I get stopped out 6, 7, 8 times. I'm vividly remembering, I don't know which coin it was, but I am pretty certain I've gotten stopped out 10 times in a row on an altcoin, trying to play market structure. And I finally just quit. I just said, this one not working out. We're going to a different one. And then ended up making that money back on the next trade. So the more patient trader that isn't trying to predict when the top is going to be and when the ultimate reversal is going to be, and more importantly, isn't afraid to lose, all right, I'm always prepared that everything's going to go wrong. And if it does, I'm fine. With Elliott Wave, like I said, because of the nature of it and the false sense of confidence that it gives, people tend to put more risk down, and they tend to believe in targets more than what price is actually doing. So there's just a lot of negatives that I saw personally. It's not me hating on Elliott Wave. It's me noticing problems and then trying to fix them. So we didn't have an ABC structure here, and then price continued on to the upside. Now, I would be taking a hedge position here and a hedge position here. Now, I'll explain in a second different ways to go about it, but this is the main strategy. This is the main strategy. So the hedge short position is taken if everything goes wrong and we are completely stopped out of the original position. I'm not hoping to take short-term profit and maximize gains through the short. The short is there to make sure that any of the money that has been made already will maintain on the account if everything goes wrong. And if things continue to go right and I get stopped out of the short position, well then I lose a tiny amount. And then this trade has the probability to continue even further. So what's getting stopped out of a short position going to do to me there? See what I'm saying? So then price continues on to the upside and we get another ABC top, and I'll take another hedge short. Now this short position probably would be one that I'm going to hold on to, just like the others. Unless we get I'll talk about it in a second. So already this trade is up to a 97 R&R if I was to take profit at the top of this ABC. But if I was to take profit at the top of that ABC, I probably would have done so here as well. And then that was only a 44 R&R. And then, you know, see what I'm saying? Where does it end? And to me, the answer is work with the trend. All right. If the market is going to continue to the upside, there's probably going to be some sort of retest. And like I said, sometimes it will look like this yellow trend line going to the downside off of this ABC, where there is no kind of signal. It's just down, back up. But eventually, give it enough time, you will have an A to a B to the downside as your retest. And that is where I will take my profit. All right? Because this long trade, I'm not going to try to predict where the top is going to be. But what I am going to do is continue to work with momentum and, in a sense, add to my trade. So overall, unless I see a macro bearish divergence, I'm still assuming that the trend is up. So I'm still going to be going long. And once I take profit on this trade, my portfolio is now going to be worth significantly more. So therefore, on this long position, so we're transferring our long from here to here. All right. So let's say I had a $100 portfolio and I was using 1% risk. Let's say I got stopped out probably around 10 times between the short positions and the initial entry. So overall, I come out with an additional 50% added to the portfolio, you know, if I'm using 1% risk. So now my account is worth 150. I'm just using very simplistic numbers. Obviously, nobody wants to just make $50. I understand that, but you can extrapolate those percentages out to a much larger account. If you had 100,000, now you have 150,000. Let's put it like that. So now if you're still using 1% risk, now your risk goes from, you know, if we're still using the $100,000 portfolio analogy, just to make it sound more exciting, your 1% risk goes from $1,000 to $1,500. So now if you see another 50 R&R trade in the future, instead of $50,000 profit, now you're going to make $75,000 profit off of the same exact percentage move and the same exact R&R because your account grew. So in a sense, you're adding to your trade. You're continuing to move with momentum. You're buying high and buying even higher. And you're increasing your margin size because your account is growing in value. So then, you know, if we're continuing with this mock setup here, you would now have an A to a B to a C on the macro. And you would have a hedge position from 14, you know, from this here, if that ever went back up and ended up coming back down. And, you know, sometimes we don't come back down. Sometimes we blow past the A and we continue past the A. And that's good. All right. I either want us to go up and back down and plummet, or I want us to get above it and just keep going above it. All right. If one of those two things happen, I'm happy. All right. Because that means that we're not, you know, lollygagging around that resistance or support and getting constantly stopped out trying to enter the hedge trades. So you just rinse and repeat that until you get significant macro positions that pretty much scream out to you, if we can't get above this level, it is no longer holding, you know, it's no longer a good idea to hold this long. You know, if we started building out a, you know, A to a B to a C off of that, you know, if we're not above that A, I'm not holding that long. Plain and simple. But yeah, it's the same exact thing to the downside. You know, if you have an A to a B to a C, and actually, let me use a real world example. All right. This is something like, these are real trades. This isn't magical. I'm just drawing on a chart. Let me show you real quick. Because I'm sure if you're not super familiar with ABCs, you know, you kind of need the proof in the pudding. I can sit here all day and draw ABCs. And the cool thing about ABCs in particular, just like how Elliott Wave is, it's not an indicator. It is price action. And price action does not change. So when there's an ABC on historical price action, that's an ABC that was in real-time price action, and you could have taken advantage of it. Albeit the chart might have looked a little bit different in terms of missing some of the, you know, follow through. but the position was there. Whether or not you trusted the position, that's a different story. So, for example, you know, just showing you how it would work on the opposite end for short positions. We had an A to a B to a C. This was my short position right here. And you can see there was a little bit of fluctuation on the smaller time frames when we were around that region. So yeah, you probably would have been stopped out, you know, 3, 4, 5 times. That's okay. You know, that's a part of my trading strategy. I know it's going to happen, so therefore I plan other factors around that. So price action starts to drop. And if I was to be an Elliott wave trader at the time, I would be targeting the 0.382, which was 38K. So let's go ahead and set up the trade as if I was an Elliott wave type of guy. You know, let's say that we're using a 1% stop loss. All right, and you took profit of the 0.382. That's a 15 R&R trade. Not bad by any means. You did get stopped out 4 or 5 times, so therefore it does cut into that 15 pretty decently. But overall, still a profit. And look, even price action started to kind of cruise around there, started to go a little bit sideways. All right, and this is the trap that you fall into. Because of that 0.382 number, and you thinking that that's where the downtrend is going to end based off of the top, and then price action starts to go sideways a little bit, it starts to add to that confirmation bias that, oh, I knew it was going to go down to 38,000 and now it's starting to bottom out. Let me go ahead and go long, close out my short position, and let's go ahead and go to the upside, baby. Instead, what you could have been doing is saying, well, this is a pretty significant ABC, all right? And we're kind of in the bear market. We're breaking back below local lows. Maybe it's not time to let go of that short position. So instead of taking, you know, the stance of, I'm going to cut the short position short, you could say, all right, well, let me go ahead and see if I can find a hedge position. So we had A to a B to a C, and you take that position, and it doesn't look like you would have been stopped out, but maybe once, and then obviously twice when we actually broke back down again to the downside. So that wouldn't have really cut into the profits at all. So already I could say that we've been stopped out 6 times overall in this macro trade, you know, based off of the entry, and then obviously trying to hedge the position just in case, because once again, just like how I wouldn't be so sure that we're at a bottom and we're going to proceed higher, I also wouldn't be so sure that we're at a top and we're going to proceed lower. All right. Just like right here, you know, I'm sure many of us felt like this was the bear market that was going to continue even further down, but we ended up going back up. But you know what I did? I had a long position and I let it carry on. Now, granted, once we got to this level, I kind of screwed up a little bit, but overall did pretty well. All right. So instead of being that guy that takes profit here, you look for a hedge position if one is available. If there was no ABC like the one I just spotted, then you would have done nothing. Nothing. What did end up happening? Price action plummets to the downside. Who could have seen that coming? Nobody. All right. I don't care what you say. Nobody can see that much of a flash dump coming in. Now, there's a difference between nobody can know that a flash dump is going to happen and someone that can call a target. So right here, for example, we have a local low from the previous uptrend at 29,200. We have a local low here at 44,785. And the only other real support between those 2 points was 32,000. So just a simple quick look at this and you can say, all right, if we go below 44,700 and we can't get back above it, well, then there's no support to catch us until we get down to 29K. So when I was back here and, you know, we were in the midst of bearish ABCs and we're starting to approach that 44K level, and I say, I think we're going down to 29K from a personal perspective. It's not me being Nostradamus. It's me saying, well, if we break this level, then there's nothing underneath us. It's a simple thing. And then, but like I was saying before, no one can predict like how fast we're going to go, how violent it's going to happen. So for, you know, a massive dump to happen like this, anybody that says like, oh, I saw that coming from a mile away, you're stupid. I had a short position open. I didn't even see that coming from a mile away. So obviously as time moves on, new ABCs form. So right here, we have a downtrend to an uptrend to a downtrend. Now we're kind of moving in sequential order here. So anything past this horizontal line to the right does not exist yet. So you're now still sitting in that short position. You got stopped out twice trying to hedge long. You're now hefty in profit. What now? You know, by that point, we had found relative support after a short period of time around the 29K local low. So someone would say, well, we're sitting at a local low, 29,000. Do you think it's time to take profit on the short position because it's such a significant local low? Well, no. The momentum is still to the downside, right? On the macro scale, especially considering the macro ABC from the two twin peaks of the bull market here and here. So while most people would never get to that point in the first place. Most people would have taken their profit miles ago. No, 99% of people do not have the balls to hold on to a short trade that heavy in profit and not touch it. But that's what makes you your money if you do this correctly. Because when other people are complaining that, oh, how could you even see this coming? Or, you know, you're just super lucky, man, to be in a position like that. People are going to say that shit. And I'm going to give another example way down the line of when stuff happens that's so unpredictable, but yet you're in the position that works with it, not against it. And that's the thing. If you're not working with it, then you're probably not in it at all, because you have a short stop loss that's going to get you out of the position once the momentum invalidates the current trade setup. So if price action goes completely opposite of what you want, you're not hurt at all. But if it does what you want, you're sitting pretty. So we opened up our ABC position here. We're still holding on to the short position. Price is moving up. People are starting to get super, super scared about, you know, taking profits on their short position because, hey, we're sitting at a macro local low. You know, I'm up $1,000. This is insane. I don't want to lose it. I'm going to take my profit. So what happened? Price came up. Price came down. Price came up. We formed an ABC short. So now what we can do is we can take profit on our short position, the original one. And then once this confirms to the downside, you know, you don't take profit on the short position. Once the pattern confirms, you take profit on that original short position when the pattern is fully completed. All right. Hopefully that is separated in your mindset. So by fully completed, I mean the C is higher than the A. All right. Confirmed means that we have a C higher than the A, but now we are back below the A. We are confirmed short based off of the pattern. That's the difference between confirmed and a completed structure. An incompleted structure would be like that. We can see an uptrend, we can see a downtrend, but we don't quite have the C wave yet. So therefore, we can always assume that it might continue to the downside before putting that higher high. So now this is a good point for me to kind of speak on this. Well, Austin, wouldn't the person that was scared to, keep holding the position make more money than you on that trade if they were in the same exact position? Well, yeah, they would have. But how many times is it going to happen in the future where there isn't a local low telling them to go ahead and get out of that short position? And price action continues, but price action slowed down and went sideways for a little bit, so they got antsy and they took their profit. So I did exit my short higher. Let's see. I exited my short roughly about 8% higher than the person that would be scared. But that person also, what was their methodology? Oh, we're sitting at a macro low. I probably am looking for more upside now. We're at a massive support, so therefore we're probably going to go up, right? So when that short position shows itself, the secondary one, the newly formed one, how likely do you think they are to take that trade? And if they do take that trade, do you think that they're going to probably take short-term profit off of $29,200 again? Or do you think that they might think that it's going to break through? I think the first one. I think that they're going to be scared to hold that trade because we're so close to a support. So what happened again? Well, massive dump to the downside. Again. Then we had a little ABC long action off of this. And it did get kind of rough around this region, I will admit. We had A to a B to a C, and then that became an A to a B to a C, and then that became, an A to a B to a C, and finally it toppled over. So, I mean, this can happen. And that's the thing. Not even Elliott Wave would have called this. So if you're playing on Elliott Wave, what explanation do you have for this? Oh, that was a backwards triangle XY, WXYZ pattern. You just wouldn't know. I'm speaking like arrogantly just because that's how I usually talk. But I'm not, the person who asked me about why I transitioned away from Elliott Wave. I am not trying to say that you're an Elliott Wave snob. All right, nothing but love. I'm just explaining my perspective. So even on Elliott Wave, if you're looking at this from like a 1, 2, 3, 4, 5 perspective, we have a 1, a 2, a 3, a 4, and a 5. They probably would have thought that it was finished there, and that's what I was trying to transition away from, is being so absolutely certain that once we have a 5-wave structure or an ABC bottom, that was the end of the trend or whatever, and we started targeting 1.618 extensions. It was a whole thing. So in this, yeah, you would have been chopped out. You would have been chopped up a little bit. All right, you would have been stopped out plenty of times. All right, but once again, off of this trade alone, just from that ABC to this ABC, that was a 68. And then you would still be holding on to this short position until that top finally hit. So we have a 68 plus a 47. So over 100 R&R between the two short trades after you would have, well, actually, no, because of what happened, you actually would have entered short again there. So therefore you would have taken profit at 61. I do remember that we did that. So 61 plus 68, 120. So if you get stopped out 5 or 6 times in this region, and you're using a 0.5% risk or 1% risk, big whoop. All right. You're already up double your account. So if you lose 10% of a newly 100%ed account, if you had 100,000, and now you have 200,000, and then you lose 10% off that 200,000. You lose $20,000. You're still up $80,000 from both of those singular trades, and then you hit a new one right here, and then the pattern continues. So as we started to approach the macro local low and price action did start getting more macro flat, and more importantly, once we had an opposing macro ABC long position that actually was confirmed, all right, that's when things started to shift, and I can go ahead and start getting out of short positions a little bit earlier than I typically would. And that was A to a B to a C. And the example that I was talking about earlier, where if you're doing things correctly and you're not paying attention to price targets and all that kind of stuff, when things happen that other people are like, oh my gosh, how could you ever predict this? It's not about predicting. It's about paying attention and then kind of just luck. All right. But it's luck that you run dry in a good way. All right. Instead of being like, okay, I got a little bit lucky. Let me go ahead and take my 10% profit and walk away. So right before the FTX crash, I was short on Bitcoin because of this ABC right here. A to a B to a C, plain as day. I was short at the very, very tippy top. And then, just a couple days before my birthday, FTX failed and we collapsed to the downside. And I took profit on that short position right here. All right, it's kind of hard to see because the price action was so super quick, but we had an uptrend, we had a downtrend, and we had an uptrend. So I took profit on that short position, not all the way down at the bottom. I took it right here at 17,935 because that's what makes sense. If the market is going to continue to be bearish, it's going to be from that point. So I might as well hold it from there and add to my position. And once again, how many people do you think let that influence them so badly? They're like, oh my gosh, one of the biggest exchanges on the planet just crashed. Why would I be buying right now? How many? I'm sure there's a large, substantial group of people that thought that way. But, just a couple weeks / months later, we're zooming back to the upside. So for me, I don't care about FTX. I don't care about, interest rate hikes with the Fed meeting or anything like that. So when I saw the A to a B to a C, obviously we did put in a slightly lower low than this one right here. So I used that one as my entry. But, for all intents and purposes, that's the ABC. To me, ABC, we're back above the A. I'm long. And it's of such a significant size that I can confidently say that we at least are going to be retesting some of the last macro local highs. And it pretty much worked out perfectly. We came back up to that one, retest. And once again, like I showed off in the full drawing example, see how this had a retracement and just boop, straight back up. There was no long entry within this retracement whatsoever. So if you did not hold on to your long from down here, because, wherever that might have been, because, we had an ABC short or whatever, you wouldn't have found a reentry point. We didn't get close enough back down here for you to reenter. We didn't put one in trend. You would have been stuck and you would have had to enter from a higher point. So then we got back above that local high, started charging up to the second one, got close, came back down to retest previous resistance, found new support, got back up to the resistance, came back down. And you can see right here, you know, we had an A to a B to a C. So you could have found a new long entry if you screwed up down here and then held it from there. And then you would target the next local high. You can see we came all the way back up to that local high, got a rejection, came back down. There was no significant ABC structure during that downtrend for you to take an entry off of, unless you're playing on super small time frames and really willing to take a chance. And then we continue rocket shipping back up to the upside. So that's the whole purpose. If you don't hold on to those long positions, you might not get another chance. Now, you could say, well, I could have just entered long. I don't need an ABC. And you don't. But I do. That's how I maintain order. That's how I maintain risk discipline. If I'm just entering long, what's to stop me from doing really dumb stuff all across the board? With the ABCs, it limits those times. And more importantly, ABCs have a confluence with resulting price action. When I see a confirmed ABC, depending on the size of it, and the local highs and local lows that are involved with that transaction, I can now have a clear picture of what I should expect. But if I take away all that, well, then what do I have? I have 1.618 targets, which, as I've explained before, trading that way is not going to maximize your portfolio. And somewhere down the line, something's going to happen and it's going to screw you up. So if you don't take advantage of the trades that can make you hundreds of R&R, well, then at some point, something is going to happen that wipes out whatever profit that you are making. Because at the end of the day, taking profit purely simply based off of, well, sounds good to me, that's fear. If you go on Wall Street Bets, notorious for having people that see astronomical numbers of growth, and then all of a sudden it goes to nothing. They always blame it on, well, you should have taken profits. If it's good enough to screenshot, then you should have taken profits. But the same people that are saying that are the same ones that lose just, the same exact amount of percentages. Taking profits is not what makes you profit. It's the way in which you do it that matters, and whether or not you are maximizing the potential. If I can make 10% guaranteed versus seeing an 80% profit, but then having the correct market structures in order for me to take profit, and then I walk away with 60%, I still made 50% more than the last guy. Of course, I'm not Nostradamus, so I can't make the full 80% unless the market, is a blessing and it gives me that setup at that 80% mark. Other than that, very, very long intro, but you asked the question of why I transitioned from Elliott Wave to ABCs. And I really need to strike home that the core part of ABCs, although that is how I find my entries and what everything is based off of, the part that matters the most is how I work myself through a trade. And I don't get scared. I don't pretend to know what the highs are going to be. I don't pretend to know how fast something is going to dump. I just go with price action. So, like I was saying before at the very, very beginning, probably an hour ago, being the person that takes profit at the 0.618, that's not a bad thing. But I do think it needs to be in conjunction with a strategy that is of the understanding that you need to maximize potential. So you can have one account that's using smaller risk that is trying to kind of, for example, on this short position, it is okay to notice the things that are happening. If I say, all right, I have an A to a B to a C, and this is a strong bullish reaction off of a previous resistance, I think the market is pretty damn bullish right now. It is okay to have that bias, and it's okay to expect price action not to break below those levels. So, having a target for a short of, 55,500 is all right, but it needs to be on a separate account that has the intention of taking profit based on macro bias on a price point that makes sense. But you also have these other accounts, a macro holding account where you're just kind of holding because it's Bitcoin, baby. You have a swing portfolio that is maximizing potential based on momentum in the trend. And then you can start having these accounts that are trying to, create additional profit through the shorter term moves, as long as you kind of have everything wrapped up in one. That is the key to success with ABCs. It is not just the ABCs themselves. If you're entering short on an ABC short, and then you're exiting that short on an ABC long, that is not the correct way to do it unless you're having multiple accounts. Super long answer, but I just wanted to be super, super thorough. And just to let you know, I have not looked at chat for like the entire time I was explaining that. So I'm scrolling back up in chat to see anything that I missed. Levels on Ethereum BTC. What about that? Oh, we're having a little bit of a pump here, coming back up to retest the A. Are we past the A? We're a little bit past it. We're a little bit past it. I am still... Let me check. I need to refresh my chart. Okay, so now I am in the negatives a little bit on Ethereum, and of course a little bit on Tron. But my Bitcoin long is obviously working out, which my Bitcoin long has already made $55, and I'm up an additional $11. And I started with $100, so already we're sitting at positive 50% for the entire portfolio, which is really good. Really, really good. Love to see it. It was like 3 or 4 years ago. I don't really remember. So, that is so true. When I tried to use Elliott Wave heavily, there was so much arrogance and ego because it made you feel like you had some crystal ball. Mindset is so important. Yeah, and like I said, I mean, I don't think if it wasn't for Elliott Wave, I don't think I would be at this point now, where I have complete and utter confidence. And I'm relaxed, and I'm making more profit than I ever have. If it wasn't for Elliott Wave, I wouldn't have gotten to that point. But I do think it takes a certain type of person. I think if you give anybody enough time, eventually they might come to that conclusion, but a lot of people are stubborn. To notice the flaws that Elliott Wave can have and find some way to get past those. Most people will be stuck. And they'll probably just move on to something else that is just as similar. The market's going to dump because we have a red dot on our indicator. See, it's the same thing, just in a different form. It all comes back to just thinking that you're better than something that you have no control over. S&D, supply and demand. I don't know why I didn't didn't just understand that the way I first typed it. But yeah, I mean, supply and demand, you can, I think we were using open interest way back when, which had varying results. It's not something I use now, but I use ABCs. And then obviously I just gave super long answer on what that is. And then I use that in conjunction with very simplistic macro, local highs, local lows. So, you know, when we're in the bear market, what do we try to target? Well, we try to target local lows. So if we start on Ethereum here and we're looking at the uptrend that was the bull market, and God, look how perfect that ABC top was on Ethereum. Oh, God, that is so beautiful. We just didn't know how good we had it, you know? Because that's around that time is when I started to transition to ABCs, and I didn't quite have the hedging down yet. I didn't quite know how I was going to do it. That happened over the course of the downtrend. I did that with the example that I showed right here, this ABC and then ABC and then ABC. That's when I started to understand what I wanted and how I could take advantage of these core principles that high-end traders take, but adapt that to how I view the market. But, you know, just back to this. If we're looking at this uptrend, which is the bull market, let's go ahead and mark out the local lows of this uptrend. So we had uptrend, downtrend, uptrend, downtrend, uptrend, downtrend. And there's no real easy way for me to, you know, say like why I would choose that as local low. To me, it just has to do with, it's so hard for me to explain this. It's more of just like a visual thing. Obviously having Hakonishi candles helps a lot because you can see that red downtrend, but it's having to do with the size of the downtrend versus every other corresponding downtrend before then. So these local lows right here, I would say this one, if the time was right, like if we were all the way back there, that would be one that is considered. But as we went on, the local lows needed to get bigger and bigger for them to have any influence on price action. So like in a downtrend, you know, besides ABCs, how do you kind of figure out where you should be targeting for a bottom? Well, you draw out the local lows, because the local lows are where price action held and then continued to put in higher highs. So if you're in a bear market, the previous resistances should never be looked at as a secure place of support. You should always be looking at the local lows. Just like how in a bull market, the previous supports of the bear market should never be looked at as primary resistance. The previous highs of rejection during the bear market should be looked at as points of major resistance. So, I mean, it simply comes down to, if we can't hold 17,000 or 1,700, then we're probably going to go back down and retest 1,300. If we can't hold 1,300, we're going to go back down to 908. If we can't hold 908, we'll probably go back down to 476 to 300. And what ended up happening? You know, we went slightly past the 908 level, but pretty much on the money. And although Ethereum, and this is the the good thing about having multiple opportunities across the board. Ethereum didn't put in any ABCs down here that would have been valid, in my opinion. There's nothing here that screams we're at the bottom. But what ended up happening? All right, we hit the local low. Price action had a nice return to the upside. And then we had the retest confirming support that we are probably at the potential bottom of the entire bear market. And off of that, we had an ABC. And it wasn't, probably fun to get that entry. But once you got that entry, your next major take profit point was right here. And that one was not fun either. But then your next major take profit point was all the way up here. So if you make a 60 risk reward ratio here, and God knows how much this one was. So if you're playing off of this ABC, like right here, once the opportunity formed, I probably would have attempted to play off of the ABC that's within the C wave here. Because it's fun to be a little bit risky. But if you have an ABC within a C wave that you can use to play back into the larger ABC, you can do that as long as it's a decent time frame. If you're doing that off the 1 minute time frame, God help you. All right. But you can see this is a daily chart. So seeing an ABC on that time frame, using that as your entry point can save you a lot of time and headache. So, if you're using 0.5% stop losses and your next take profit was all the way up here, that's 179 risk reward ratio. So God forbid you get stopped out 10 times. If you're going to make, 200% to your portfolio, but you get stopped out 10 times, losing 1% each time. If you're honestly upset by that, I don't know how to better help you cope with life. Crackhead time frame, crackhead time frame. I'm sorry, guys. Bearish Kite. Just, he has the advantage here. On the 1 minute time frame, we have an ABC short position. So, I really don't think there's any hope for bulls here. That's all I'm saying. And if it's not clear, that is sarcasm. All right, this can really go either way. As I said before, with the CMEs, if we can stay above the previous A during market open, I think a lot of people are going to take that as a bullish signal, and I think we probably could see 66,000 pretty easily Monday and Tuesday if things open up bullishly. What do you mean by we haven't confirmed the down for the last ABC building up? Don't we place a trigger order as soon as it crosses? So when I was explaining that, I was referring to the fact that, and I'm sure I explained it, even after you asked your question, I probably answered it, but just in case. If I remember correctly, that's when I was saying there's a difference between a confirmed trade and a completed trade in terms of setup, ABC. So if you have a short position starting from here and you have the opportunity to enter short here, all I was saying was you take profit on the short position from up top when the trade setup is completed, meaning the C goes above the A. As soon as the C goes above the A, I'm closing this short. Right? Because now it's the opposite. If we are above the A, we can always continue higher. But if we go back down below, aka confirming to the downside, right? Price action coming back down like this, right? That now becomes a confirmed ABC short, basically telling me, even though price action tried and had varying success pushing past that previous resistance, there just isn't enough gas in the tank, despite every reason for us to be bullish with us breaking that resistance. We still couldn't do it. So to me, that is why we short ABC tops. So yeah, you are right. It would be a trigger trade. As soon as I come back down below the A, I'm now re-entering that short. I was just purely explaining that, like, I don't need the position to become active and confirmed in order for me to close this position and reopen the new one. I can close this position as soon as this one now becomes a valid structure, you know, even before it's actually confirmed. Let's dubiously speculate about the top if it's not already in any price targets in mind. I'm eyeing 76,000 to 94K or 96K to 115K. Are you talking about the top of the bull market? You're being very conservative. And I respect that, honestly. I'd rather people be conservative. As long as it, you know, we just had a whole ass hour conversation about why bias can prevent you from making the most out of price action and being the person that is in that significant uptrend, significant downtrend when nobody else is. So, you know, from a dubiously speculative price prediction, you know, I appreciate you being conservative as long as that doesn't impact how you feel when we're at those levels. You know, if we show an ABC long position while we're at 115K, I'm going long. All right. If we have an ABC long position at 176,000, which is my funny number, that's what I'm predicting for the top of this bull market. I've seen people calling for 300K, and they're not wrong. Nobody's wrong yet because it hasn't happened. Everybody's right and everybody's wrong at the same time. It's Schrodinger's Bitcoin. Nobody is wrong about the top of the bull market yet. Yeah, based off of some, you know, just coincidence, I'm just going to call for 176,000. And if you're curious where I got that from, it's, you know, I hate that this conversation has gone in this sequential order, but if we go to like Bitstamp real quick. So here is this bull market here. All right, and that bull market was calling for 8,673. Obviously, we pushed pretty significantly past that. This is on a logarithmic chart, so it really didn't push past by much. You know, obviously in stock standards, exceeding expectations by 100% is crazy, but for Bitcoin, that's just another Tuesday. So I did it again with this one right here. So we took the bear market and then we targeted the 1.618. That gave us 62,000 and we hit slightly above that. We hit, you know, 69. So I did the same thing again and it's calling for 172. So I kind of assume, because Bitcoin's a hype machine, that we're going to go a little bit past that. So I'm calling, you know, I'd say like 176 to like 185. I think that was sushi we're long in, but in Twitter it was viral. The founder had fingered a horse. Am I reading that correctly? What in the hell? Okay. You know? Is he a farmer? Does he have a medical reason for doing that? You know, like I've seen people elbow deep inside of a cow, right? But you know, they got a reason. They got a reason to be in there. So I'm gonna need a little bit more backstory on that one. I will pray for 200K, but if we do get a massive bull run towards 200K, the forever top might be in. I just don't think so. For forever top, no. But you know, as I've talked about before, these it's gonna take longer and longer and longer to break all-time highs as we continue. So, you know, the chart itself, you can see it in the chart. It's getting flat. You know, if we just take a simple curve here, you know, no special tools needed. It's getting flat. And obviously this curve isn't meant to go to the downside. Eventually it would kind of just level out. Like that. And it would gradually keep going up, but overall, no more big pumps. But even then, like even if Bitcoin during the year only has swings of 20%, I'd still be trading it because of the nature of Bitcoin. There's a lot more ABCs to be had because of the free market nature of it. It's what do people think? That's price. All right, when you start getting into stocks and stuff like that, there's a lot more influences and regulations that can prevent the price action. It still happens. You still get plenty of ABCs on the SPY and the DXY and Apple and Nvidia and AMD. You still get ABCs that you can take advantage of all the time. But on Bitcoin, there's a lot more because there isn't those regulations. Kite, bring back carbon-based life forms. That's a good callback. Do you still enter trades with 1% stop loss? Right now I am. But you know, as things move on, like I said, I'm a high stakes trader. I love those big profits. And if I can get those safely, the only real way to do that is to be willing to lose money faster. Not anything percentage-wise, but in terms of how much price action has to happen, yes. So probably sometime in the future, we'll be transitioning to a 0.5% stop loss, depending on the coin, of course. If it's a no-name altcoin that moves tons of percentages back and forth but before making a decision, then a 0.5% stop loss is just not going to cut it. And gosh darn it, man. I literally said, I don't want to be here for 2 hours. And here I am for 2 hours. Do you wait for candle closes? No. Everything that I do is in real time. If we get back above that A, it doesn't matter. Truth be told, I much rather us dump. I know that's people think that's my default position. That's my personal hope. All right, at the moment, just because of the trades that I have on the board. Obviously, we've talked about like actual technical analysis perspective. We can be bearish to a certain extent, but not anything major at the moment. But that's just because I have the Tron short and my Ethereum hedge, and which I took because of my Bitcoin long. My Ethereum hedge would make a lot more money than even my long would, just because of the percentages with Ethereum. Even Mark said time is up. Go so that you can come back tomorrow. I don't know, man. Like I feel good. I feel good, you know. And all things like considering that have happened to me recently, I don't know if it's like a manic rebound from the hellish month that I just had, but I'm in a good mood. I'm working significantly hard. You know, I'm waking up at a good time. I'm out there working. And that's the thing, like, that's something that I take pride in. You know, is even though on paper, like, I can withdraw plenty of money to cover bills and debts and all that stuff, I still go out working. Because to me, I don't want to make the same mistakes I've made in the past that 10, 30 years down the line have probably costed me hundreds of millions of dollars. To be frank with you, that those mistakes that I made because of laziness and impulsivity, that if that money was still in my account and, you know, 30 years from now, I'm still rocking it, keeping up with the percentage gains, it would have cost me tens, if not hundreds of millions of dollars. Yeah, backstory. Haha. I don't know what I was saying when you typed out that message. Do you think we can return to sub 20K after this cycle concludes? No. Well, I mean, I can't say no. So obviously, let me just break it down into what I always do. My personal opinion is no. My trader opinion, I just got to see the chart. What's happening? Do we have macro ABCs constantly as we go towards macro local lows in the bear market? You know, that's what needs to happen. So, I mean, already within this chart, the low of the bear market is in. So we're in an uptrend. Duh. All right. So let's say this uptrend continues just like this until we get to 170K. So we'll be at 170K. Monday, September 22nd. Or Monday, September 25th. No, yeah, Monday, the God. 2025, September, Monday, the 22nd. We will be at 175K. So if the uptrend continues like that and we get to 170K, we now would just be looking at the local lows, just like how we did over here. All right, over here, local low, local low, local low, local low, local low, local low. All right. If we break this one, what does that mean? Well, it means that we probably are going to go to the next one. And we went to the next one. If we break this one, what does that mean? Well, it probably means that we go to the next one. If we break this one, what does that mean? We probably go to the next one. And yes, we did go below it because of the FTX crash, but we quickly recovered and we regained the ABC support there. All right, so it did hold. So within the Bitcoin chart right now is the low of the next bear market. So let's go ahead and try to figure that out. Local low, local low, local low, local low. And at this moment in time, this is all we have left, local low. So let's go ahead and do like a 70% reduction from 175. So the bottom of the next bear market, unless anything like macroeconomic happens, is probably going to be 38K or 50K. So 50K to 38K, call it 40K flat. 45K. 45K is the next bear market bottom. You heard it here first from Kite Crypto. So you know, if you guys haven't caught on, I'm trying to be Richard Hart right now. Richard Hart, bless his heart, bless that mess. He throws out so many numbers in his tweets and in his videos that eventually one of them is going to be correct, and then he goes back and he deletes all the other tweets about him calling out tops, and then he just leaves that one. And then when he's on like Livestream or something, he'll be like, go to my Twitter, go to that timeline. What does it say right there? I called the top, I called the top, I called the bottom. So this is me trying to be Richard Hart. Monday, September 22nd of 2025, we're going to be at $175,000, and the bear market is going to stop once we hit 40K. There you go. That's all you need to know in order to have a successful time. As I said, though, my personal perspective is that we will never see 20K again. But if we get to 38,435 during the bear market and we get below it and we can't get back above it, we're going to 24,700. And I would say more than likely that one would hold. But if we get down there, drop below it, can't get back above it, we'll go to 19,500. And then there, you got your 20K. To me, I just have no vested interest in holding any attachment. So like when I call out 175, you know, to me, I don't care at all. You know, I'm still going to be going long if the market is telling me to at that level. I'm not going to be selling all of my Bitcoin at 175K. I call these numbers just to have fun, but everything that I do is based off of the chart, support and resistance, and then taking trades based upon the ABCs that interact with those. And I've talked about the full method of how, despite my personal bias, I'll still have trades open that are in the correct position and still be making profit. appreciate you being here, man. The streams are helpful. Thank you. I appreciate you guys. Hey, Kite, what is the best way to break out trade? Same way, incorporating ABC. Catch the ABC down, then retest A wave and enter. Catch the ABC down, then retest A wave, enter. In a perfect, if I get what you're saying, you have an A to a B to a C, like this. And then you have an A to a B to a C like that. In a perfect world, that would be pretty awesome because you're essentially taking the breakout of this resistance, but with confluence of the smaller time frame, that price action is going to continue. That's cool. But that's not going to happen all the time. You know, if we're in the correct market, breakout trades don't have to be at all difficult. All right, if the market comes up and it puts in a high, as soon as we break that high, you take your breakout trade. And during this period of time, I was playing on smaller time frames. There was plenty of opportunities to do that all the way up this trend line here. So that's kind of what I'm testing out right now, especially with us going into the bull market. Breakout trades have a much higher likelihood to work themselves out with little to no trouble. So if I have an ABC position like this, and I take a long from where to go? If I take a long from here, all right, cool. I am testing whether or not taking profit on that position once we get past the A makes sense. You know, that way I can add more margin because my account has grown, which in turn is adding to winning positions, trying to incorporate principles from one of the greatest. And then at the same time, if we happen to go back below, then I have the opposite position covering me. I'm trying to see if that is going to work itself out. Obviously, if I find that I'm running into way too much trouble where it's pretty much just doubling up on my stops, then I'll revert back. What strategy should a beginner use? I would say probably the most beginner-friendly strategy would be daily MACD crosses. So if I just go ahead and I forgot how I get this onto the chart itself. There we go. All right, so let me clear this up for you a little bit. So let's go ahead and double the inputs real quick to like 24 and 52 just to get rid of some of the noise. All right. So MACD crosses, it is a little bit of a lagging indicator. And I probably would only be doing this on spot trades or extremely low leverage, high stop loss derivatives trades. And the reason why I think this is beginner friendly is, one, it's very simplistic. And I think it will help you build a habit that, as we've talked about on stream today, is essential to become a high-end trader. And what is that habit? just being patient and pretty much just sitting on your hands. And not being upset when you don't get the maximum profit. That's the key potential here. We're aiming for like an 80%. All right, so if a move goes 100%, we want to capture 80% of it. All right, we might not always, but that's the goal. It every time it will beat the person that is only looking for a 10% gain when they could have made an extra 70%. So MACD crosses, all right, when the blue line goes above the orange, you buy. All right, so that would have been right here. Is it Alt V? Right here. And then when the orange line crosses above the blue line, you sell short here and here and here and here and here and here and here. And then here. Didn't mean to do that. Here and here. And here and here. And here. All right, I'll stop there. All right, so starting from this first vertical line here, that was a buy long. So every time that we go to a different line, it's going to switch. So buy long, buy short, buy long, buy short. All right. And the reason why I say do this on spot is because you're almost guaranteed to be in a winning trade when this happens. But there's not much room for like short stop losses and high leverage and all that stuff. So you don't really want to do that. But here's the thing. So this confirmed to the upside right here. All right, at 34,470. But after it confirmed to the upside, we still went all the way back down to 29,500. So once again, it's teaching you something really important, right? That you need to go ahead and sit on your hands. Now on spot, that's very easy to do because you're not going to get liquidated. If I sell my position, what happens? I get US dollars. And if I buy a position, what happens if it goes up? I get more money. So then right here, it crossed to the downside, pretty much around the 46K level. All right. And we ended up going down, but we confirmed back to the upside and we confirmed around these two candles. So for all we know, it could have been about 52K that you would have re-entered. So yeah, you would have sold roughly around 46K and you would have ended up buying back at 52K. But then you get all the way up here, you bought at 52K and now you're selling at 61K. And then down here, you sold at 61K and you bought back at 40K. And then right here, you bought at 40K and you sold it back at 42. But then you get these long trends where some, nothing is perfect. Doesn't matter what strategy you go to, but if you take it for what it's worth and implement good psychology and not get upset at the profit that is made, you're going to outpace people. And that's the whole goal of this. So when a really good position opens up like this one right here, you would have bought long at 16K and then you would have sold it right here at about 24K. And then you would have bought it back around 24K again, but then you would have sold it up here at 28K. You rinse and repeat. And then right here, for example, you would have bought back at 47K and you would have sold once we got to 69K. So there's going to be good shifts and there's going to be bad shifts. There's nothing you can do about that. The daily MACD cross to the downside at the top of the bull market at about $57,000. And then it did not cross back to the upside until we were around 34K. So, you know, that single MACD cross would have saved you a 42% loss. So it's very simple. And if you do it properly, it can teach you very good habits that you can translate into higher profit strategies like ABCs. Now, straight up, I would just probably recommend ABCs. And I mean, during this live stream, I explained it for well over an hour, like really thoroughly. You know, I get into a position, how I get out of a position, the plus side of it, what you need to watch out for, all that stuff. I explained this live stream. So if you rewind a little bit, eventually you'll find where someone asked me why I transitioned away from Elliott Wave, and that's when I began the whole tirade. But I also have a video on my channel that's short and sweet that explains ABCs. And to me, they are simple, but to each their own. Love you, Kite. Glad you're back. Keep it going, please. But okay, now let's put the dog on the video. That's why I'm here. He's chillaxing. You know, now that he's bigger and older, I really don't like, you know, holding him up to the camera, because I don't want to hurt his joints. But you can see him walking around in the background sometimes. About the cow's elbow deep story? Oh. My theory is kind of for an 11.7 or so as an 88% of assured 100K, even if the trip is 2. I got you. I just think it's a little bit too much to kind of predict that stuff. Me, I look at the local lows and I see what's possible, and then, you know, kind of look at what's most likely based off of previous performance, and that kind of 80% retracement, 60% retracement lines up with the 49K and 38K local low. All right. I gotta go ahead and cut it short here. It's unfortunate nothing really excited happened on stream today. You know, Ethereum had a little tiny spike to the upside. Nothing to write home about. I have not been stopped out of any of my positions yet. I'm still short on Tron. I'm still short on Ethereum, and then I am long on Bitcoin. But yeah, that's about it. Hopefully we'll have more to talk about tomorrow or the next day if I show up. But besides that, guys, let's go ahead and do some Wordle, keep our brains active, and then I will see you guys in the future. All right, so raised donut. Hey, that actually worked out pretty well today. We got 4 letters already. So we have a T, S, and an A, and an E. So T and A and S. Really? Okay. I felt, you know, one of those two should have. I mean, you got skate. Okay, there we go. I was really hoping that it wasn't going to kill me, because what other options were there? I guess that was it. Yeah, that was all. Shate. Yeah, there was no. Okay, so that was a good one. That was a good one. I feel like, you know, that was kind of just luck, whether or not I got it on the first try there, because there was 2 or 3 options to choose from. Right. Hopefully, tomorrow with market open, we get some resolution whether or not we are going to continue up or we are going to break back down. I'm hoping for the latter. Like I said, I mean, it's just coincidence. I got a Tron short open because Tron has a short position. I'm already hedged short for my Bitcoin trade off of Ethereum. Obviously, it would just be in my favor for us to go to the downside. But yeah, I appreciate you guys very much. And let's do the thing. Let me go ahead and pick a song for our outro today. I know not a lot of people stick around to listen to them, but I like to put a little bit of effort in. I'll put something on that's not too crazy. I'm sure many have heard this song before, so. All right, guys. I appreciate everybody for being here. I'm glad to have some sort of semblance of being back. I'm pretty confident over the next year and a half, we are going to be in the throes of the bull market, and I'm here to stay. This past year, it's been a lot of soul searching and trying to knock myself out of old habits. And of course, I still have many that have followed me, nicotine and stuff like that. But in terms of like the habit of being stupid and immature and just doing what I shouldn't. And, it's an ongoing process. So obviously, I kind of just walked away from streaming just because I just wasn't feeling it. But things are better, even though at the same time they're worse. So yeah, I'm not in the business of making promises, but if I got extra time when I get home in the afternoons and stuff like that, I'll show up for a little bit and we'll talk. So until I am actually consistent through a showable record, I will never say that I'll see you tomorrow, but I will see you soon. How about that? All right, guys. I appreciate you very much. Barry, Wilhelm, James, appreciate it, guys. And let's do this thing and head on out. Bye.
A person who thinks all the time has nothing to think about except thoughts. So, he loses touch with reality and lives in a world of illusions. By thoughts, I mean specifically chatter in the skull, perpetual and compulsive repetition of words, of reckoning and calculating. I'm not saying that thinking is bad. Like everything else, is useful in moderation. A good servant, but a bad master. And all so-called civilized peoples have increasingly become crazy and self-destructive because through excessive thinking they have lost touch with reality. That's to say, we confuse science with the real world.
This is the beginning of meditation.
Most of us would have rather money than tangible wealth, and a great occasion is somehow spoiled for us unless photographed. And to read about it the next day in the newspaper is oddly more fun for us than the original event. This is a disaster. For as a result of confusing the real world of nature with mere science, we are destroying nature. We are so tied up in our minds that we've lost our senses. Time to wake up. What is reality? Obviously, no one can say because it isn't words. It isn't material, that's just an idea. Reality is
The point cannot be explained in words. I'm not trying to put you down. It's an expression of you as you are. One must live. We need to survive, to go on. We must go on.